Enjoy the episode with Tom Wheelwright. Tom, welcome to the show.
Thanks for having me, Mark. It's great being here.
Well, you've got a longtime fan with me. I listen to your show. Everyone else should check out your show. The content of your books and other material you put out there is just really remarkable. But I want to go way back to little kiddo Tommy. What was money like for you as a kid, and who first taught you about money?
You know, I come from a long line of entrepreneurs. My father was an entrepreneur, my grandfather was an entrepreneur, and my great-grandfather was an entrepreneur. Wow. So I have no excuses. It was in my blood to become an entrepreneur. So my mother actually taught me about money, though, because my mother was the controller for my dad's print shop. He actually had a fairly sizable printing company. And we all worked in the business, and I worked in bookkeeping. And because I like numbers, I was a mama's boy. I loved working for my mom, and she was brilliant. And so, you know, we talked about money all the time. So there was not a strange subject for us to be talking about.
And what was a early lesson maybe you learned, if you can recall?
Real estate, actually. My parents owned duplexes. And I always remember the duplexes. I remember they always had rental property, and they always made sure that it was rented. They would price lower than the market because they didn't want any vacancies. And they'd actually have a list. Like we lived, the duplexes were right across from the university. And so we actually had a list of people that were, you know, ready to rent if there was ever a spot come up, because they were great landlords, and they had tenants. They had one tenant. I remember one tenant that was there for 30 years.
Wow.
So, yeah, it was terrific. So that was a great lesson right from the beginning, that real estate is a great thing to have.
You haven't lost that lesson as an adult. So take us to where you are today and wealthability. What is wealthability, first of all? And then tell us what you help your clients do.
So wealthability is fundamentally a system for reducing taxes permanently to build massive amounts of tax-free wealth. So what we do is we develop the system. It works as long as we have CPAs aligned with us that know how to use the system, that are trained on the system, then the system works every time. I mean, we typically will take an entrepreneur, we'll take an investor, and we reduce their taxes by 10 to 40% in about the first 3 months. Okay. Wow. And when we reduce taxes, it's permanent. So these aren't taxes that you're going to pay back when you retire. Okay. These are permanent tax reductions. And so what we have is, so we've actually developed a network of over 50 CPAs, CPA firms around the world. We have them in the US and Canada, and they're trained on our system, okay, to help clients build basically massive amounts of tax-free wealth by understanding the tax law. So my love is education. My love is financial education, particularly tax education. And so that's what, you know, that's primarily my role. Plus, you know, anytime I get to do a podcast, I love it. So thanks for this. Just because I love talking to people. I love meeting new people, and I love our clients. We also take on new CPA members. So, you know, some people will say, well, I really like my CPA. I said, great, let us train your CPA. Yeah. And so whether you're looking for a new CPA or whether you want your CPA trained, then Wealthability is a good place to go.
Fantastic. Well, and I want to go back to where you first met Robert Kiyosaki. I think a lot of people might know you as his tax guy. Talk to me about your relationship, where you guys met, what happened. I mean, he's obviously into real estate just a little bit, you know, just a little bit. So where has that partnership, where did it begin and where has it gone since?
So about 20 years ago, I broke up with a partner. And when I broke up with the partner, about half the clients left and went with the partner. All of the staff stayed with me. So I had all these great staff, and I didn't have enough work for them, but I knew how hard it was to find staff, so I didn't want to lose the staff. And so what I did was I went looking for another accounting firm to buy. And I found a CPA firm. Turned out one of the clients was Robert Kiyosaki. And so I like to tell people I bought Robert.
Yeah.
He doesn't really know that, but
He's not here to deny it, though.
right, exactly. Well, I mean, the fact is, I bought the CPA firm, and he was one of the clients, and the CPA was actually on stage with him a lot. The person I bought it from, and didn't have time to run their firm. Eventually, though, they left, and Robert invited me on stage, and for the last 18 years, we've been traveling the world, teaching financial education and taxes to in Moscow and Kazakhstan and Austin and Dallas, Texas, and San Francisco. It doesn't matter where we're teaching.
Well, and around the world, this is one of the things that was a light bulb moment for me as I listened to some of your teachings and read some of your books, is that the tax law around the world has some commonalities. I guess I'd be curious, your paradigm is that the tax law is just a series of incentives. Can you describe what those, like, describe your paradigm of taxes? And then you also say you want to make them taxes fun and understandable. How does that work?
So on the first side, understand that the tax law in the US is about 6,000 pages, just the law itself, not counting the regulations, rulings, anything like that. There's one line that says all income's taxable unless we say it isn't. There's another line that says nothing's deductible, no expenses are deductible unless we say they are. And then there's charts and tables, about 30 pages, tell you how much tax, what your tax rates are. But then the rest of the tax law is really an instruction guide to reduce your taxes. And what happened was about 50 years ago, about 60 years ago, I forget how old I am. About 60 years ago in the 60s, the US government started exploring this idea of using the tax law as an incentive. So they started with the investment tax credit, was really the first big incentive. And they said, look, if we give people a small tax incentive to buy new equipment and expand their manufacturing capacity, will they do it? And it worked, okay? And so, what they quickly realized was, well, wait a minute, people hate paying taxes. So if we give them if we give the free market an incentive through taxes, we don't have to give that much away. It's a very efficient way to give money away. And then we're getting other people to do what the government wants done. So for example, if the government wants low-income housing built, there's a low-income housing tax credit along with the depreciation. If they want to redevelop difficult parts of a community, they have, we have this new opportunity zone tax benefit, right? If they want to, if they want to encourage people to send their kids to college, they give them a tax credit for sending your kid to college. If they want to encourage adoption, they give a tax credit for adopting. These are all tax credits that are there. You think about when somebody buys a house, they're thinking, do I rent or buy a house? Well, for a lot of people, what's the primary difference? Well, I get a tax deduction if I buy the house, but I don't get a tax deduction if I rent the house. Okay, so those are really examples of incentives. And the reality is that while the incentives vary a little bit from country to country, they're very similar. So real estate's always an incentive. It is always highly incentivized in every country. So is business. Business is the most highly incentivized of all investment opportunities is business. Energy, frequently, research and development. These are all things that are pretty common throughout different countries. In fact, other countries have bigger research and development benefits than we do in the US. They even differ from state to state. We have state income taxes in the US, and the states all have different tax benefits, but they all center around this idea that, look, if the government wants something to encourage an activity, they typically are going to do it by providing incentives in the tax law. So what we do is we just key in on all those incentives and say, look, let's do what the government wants done, and let's combine it with what you want to do from a wealth building activity. And then let's come up with a plan of action, what we call a wealth and tax strategy for building this, reducing taxes while building the wealth. So that's fundamentally. Now, why do I say it's fun? Well, because the funnest thing in the world is get that first big tax refund. So when we work with a client, we're like I said, the first three, we work with them for 3 to 6 months before just developing the plan. But what happens every time is that we get that call after that first tax return is filed, after we've done the planning, going, oh my heavens, I got this giant refund. And they used to have to pay on April 15th. And now I'm getting a big refund. And they get a big smile on their faces. And I'm going, that's pretty fun.
Yeah.
Okay. So I actually think taxes are fun anyway, because, Einstein said, it was quoted as saying that the most difficult thing in the world to understand is the income tax. And I'm going, well, if it's difficult for Einstein, it's probably something I should try out. I should try to figure that one out. And I love making it simple. I love making it understandable so that the average person, even a brand new investor, can understand the tax law and how to make it work for them on a daily basis.
Sure. Yeah. Well, he might have had, theoretical physics, but you got the tax law. You probably got the short end of that stick, Tom. I'm sorry to say. I
probably did.
And as far as fun goes, yeah, you're right. I think there's not going to be many accountants invited to the party, but if you gave that guy or gal a big fat refund, you better believe it. You're going to be served the guest of honor at the next party they throw. So why is it so important for us to use that tax law as a roadmap toward financial freedom?
Well, because here's the thing. So, I was explaining that the tax law is a series of incentives, right? And you really do have this roadmap. But here's the other thing that I don't think anybody's ever quite explained before. And that is that if you do what the government says do the things the government wants you to do and follow the tax law, you actually make more money. I mean, in fact, take a real estate investor. Okay. I know you have real estate investors listening. A real estate investor, actually, the way the tax law works is, in order to not pay tax year after year, you have to continually reinvest. Okay, well, the government wants you to reinvest, right? Because basically the government says, if you consume it, we're going to tax you. If you reinvest it, we're not going to tax you. So we very much have a consumption-based income tax. And so what does that mean? It means that investment actually has to become an addiction, okay? Something that you do on a constant, regular basis. Well, if you do that on a constant, regular basis, you're going to make more money. So to me, the tax law is not just a roadmap for reducing taxes, it's a roadmap to building wealth. I mean, it's an amazing roadmap for building wealth.
Well, you're exactly right. It's a phenomenal perspective, and it's quite honestly, it's been around for 60 plus years, but it's so interesting that we all as taxpayers only view it from our perspective, what we have to do. It's April 15th all over again, but you're describing it from the government's perspective. They don't want to be the builder of last resort, so to speak, for all the real estate in this country. So they've farmed it out to us private individuals to do the work. And I think that, for better, or worse, not bringing politics into the conversation, they're farming it out. They're outsourcing it to all of us to get the job done and rewarding us for it. Is that kind of a summary of what you've said?
That's exactly. And it doesn't matter if it's real estate or oil and gas, for example. We're one of the few countries where an individual can actually own oil and gas and drill for oil and gas. And so, the government's long had a national policy from a security standpoint that we don't want to be dependent on foreign oil. And so it encourages huge tax benefits, encouraging you to invest in drilling production. Other renewable energy sources. I mean, anybody who has bought an electric car, they know that there's a $7,500 tax credit to buy that electric car, right? Not Teslas anymore, but most electric cars, you can still get that. Even on a Porsche, you can get a $7,500 tax credit. Well, that's just an encouragement. That's the government's contribution to you buying an electric car and helping with the clean energy in the environment. So everything the government wants done, what they've learned over the years is that the free market is generally a better place to do it, okay? Even when it comes to employment, you get much more production. I have to laugh. I was at a conference the other day, and some of the big wigs at the IRS were talking, and they're patting themselves on the back about what a great job they've done this year. Well, they had 3 months off with pay for doing nothing, right? Those of us who actually work for a living that aren't in government, we actually had to work during that time, or we were unemployed during that time, right? They weren't really affected by the pandemic, and we were. Well, to me, that's the great thing about entrepreneurship and the whole idea of having an economy that's based on free markets. I'm a huge fan of capitalism, a huge fan of entrepreneurship, because we're going to do it better as entrepreneurs than the government will ever do it, including employment. Employment is always done better at the entrepreneur level than it is at the government level. So again, there are tax benefits for it.
It's just the wisdom of the crowds, as opposed to a few people in DC versus millions of entrepreneurs. Now, tell me, Tom, you and also Robert are very famous for talking about the cash flow quadrant and the 4 types of income earners. Could you, 1, describe those 4, and then 2, which ones are, I guess, more available to some of these tax incentives that you're describing?
So there, like I said, there's 4 quadrants that Robert talks about in his book, Cashflow Quadrant. And the first is employee, right? The second is self-employed or superstar or a specialist, right?
Solo practitioner.
Solo practitioner, any small business. And then there's B, which is big business, over 500 employees. And then there's I, which stands for insider or professional investor. And really, you can make a lot of money in any one of those, okay? The interesting thing, though, is that how you make your money has a big impact on how much tax you pay. So as an employee, and this is true in the US as well as around the world, if you make a good income, you're going to pay about 40% in taxes. When you move into that self-employed realm, frequently what happens is you end up paying more tax. So you may end up paying up to 60% tax because you're paying both the employer side and the employee side. Okay, you move into big business, and then you get the Warren Buffett syndrome that says Warren Buffett pays less tax than his secretary, right? Because they're in a 20% tax bracket approximately. And then you get the professional investor, and the professional investor, as we saw with the whole thing about Donald Trump and his income tax with the New York Times, they pay 0. Okay, well, Donald Trump would really have to have the dumbest accountant in the world to pay tax, as much debt and real estate as he has. And so it makes total sense. He pays no tax. What was surprising to me is that he actually paid $750. I don't know where that came from. But literally, it was not at all surprising to me that he would pay no tax. And that's true. Any accountant that looks at what he does go, of course he doesn't pay any tax. That's the way the tax law works. Now, here's the key, though. So you don't have to be big to get the benefits of the big business. The small business, if they behave like the big business and take advantage of all the laws that they can, and they have a good team around them, they can actually get the same tax rate as the big business. So you don't have to be at 60%. You can be at 20%. The small investor doesn't have to be, even if they're an employee, they don't have to be at 40%. They can be a professional investor and get the 0% tax rate even while they're still employed. So there are, it's not that you have to be big or, the be in the eye corner. It's that you have to behave like those guys. I mean, you have to have the team, you have to have the financial education, and you have to be willing to do those things that those guys do. And if you're lazy and you don't want to deal with it, you want somebody else to handle your money, then you're just going to fall into the Wallstreet trap of give me your money and retire poor. And that's basically the Wallstreet trap.
Wallstreet Trap. Is it you that kind of talks about retail amateur investment products versus wholesale versus direct? Could you describe that for a moment?
That would be me. That is my little way of explaining how investments really work. Okay. Because here's what people always say, Wall Street will always say, if you want higher rewards, you have to take more risk. Well, that's only true if you're a real retail investor. Okay. As long as you stay in that retail investment lane, which is stocks, bonds, mutual funds, it's real estate investment trusts,
ETFs,
ETFs, that kind of stuff. You're going to be in that realm of I'm going to take higher risk to get better returns. If you look at the wholesale level, that's what we call private equity. Okay. And private equity is only available to a certain class of people. Actually, the way the law works, it's only available to the 1%. Okay. It's not available if you're not in the 1%. And so, the government, the politicians might want to say all day long, okay, we need income redistributed. We hate the 1%, et cetera. And yet the government itself says you can't invest in that private equity lane, which is the wholesale lane, unless you're in the 1%. So
it's a lot like a Sam's Club or a Costco membership. You have to be a private member to be able to buy these certain goods wholesale. Which
that's right. And so basically, if you're getting a 5% return retail, wholesale, you're always going to double your return, right? You're going to get a 10% return. So you want to get a 10% return, but you have to be in that class of people. Now, here's the great thing though. Anybody can buy factory direct. Okay. You can actually create your own business. You can buy your own real estate. You can build your own real estate. You can invest directly in oil and gas ventures. I mean, there's all sorts of things you can do as not a wholesale investor, but actually a direct investor. And the direct investors, of course, factory charges half as much, right, as wholesale. So instead of making the 10% at the wholesale level, you're making 20% at the factory direct level. So, people who go, well, I'm not in that 1%, what do I do? Well, you can actually get higher returns. You just have to spend more time at it and be more involved with it yourself rather than turning it over to somebody else.
Mm-hmm. Yeah. I mean, the metaphor works great. I mean, if you're buying factory direct, it's going to mean a little more time, a little more energy, a little more education than just buying your sweater at the Gap, but you can get it at a great deal and maybe even sell it to somebody else down the road at a markup. So I love the concept, love the idea. Tell me, Tom, what's on the horizon for real estate and also taxes? We have now sounds like a new president as we're recording this. It's still yet to be official, but we've got, it sounds like a new administration, but a split Congress. So where do you see tax law going? And also real estate. What are some opportunities that you're seeing? Some parts of the real estate space, whether it's storage units or just kind of take it where you'd like to go. Where do you see the advantage, both on the tax side and real estate?
First of all, I think that one thing's for sure: taxes aren't going down. Right? There's one thing we absolutely know is that this next administration is not going to lower taxes for anybody. Okay, nobody's gonna. The pledge was, I won't raise taxes if you're under $400,000. There was no pledge, I'm going to reduce taxes if you're under $400,000. And the reality is that in the end, all the money is in that under $400,000 range. So they will, the people under $400,000 will get raised taxes too. Now, if Georgia goes to the Republicans, at least one of them, then there's not going to be any tax. I mean, Joe Biden will get nothing. Okay, even if Georgia went to the Democrats, both of them, which is highly unlikely, but let's say it did, then what would happen is that you'd have a split Senate 50-50, and Kamala Harris, the vice president, would break the tie. Well, that means that technically the Democrats have the majority, but you have conservative Democrat senators, and those conservative senators are going to have a lot of clout. They're going to have a lot of power, and they're going to say, look, we might be willing to go along with some things that, don't have a big impact on the economy, but we're not going to go in for these wholesale tax increases that, this $4 billion tax plan that Biden has set out. That's not going to happen. I don't think there's any question. We're not going to get a $4 trillion tax increase. That's not going to happen in the next 4 years. So what's likely to happen? What's likely to happen is small things, but not big things in the next 4 years. Now, the one thing that will happen, I think, is that we'll get incentives towards clean energy. And so if you really want to know where the tax benefits are, follow what the government's saying as where their policy is headed. So the policy is headed away from oil and gas and towards clean energy. Well, okay, so to me, one of the best real estate deals in recent history was cell phone towers. It was absolutely one of the best real estate deals ever, right? I mean, right up there with billboards. Billboards a little older, but billboards are great because they require very little maintenance and it's really easy. Cell phone towers are even better because you build it once and they come and that's it, right? Well, you're going to have the same idea with clean energy because you're going to have windmills, You're going to have charging stations for electric vehicles. You're going to have, so anything that you can think of clean energy wise, wind energy, solar energy, all of that, that's certainly the big policy shift in this new administration. I think that's probably one of the biggest policy shifts. And so if that's going to be the policy, you can guarantee that there are going to be tax benefits that follow that policy. Okay. Mm-hmm. So to me, I always look for, I look for, first of all, where's the government going? Okay. Then I have to look at what's the Fed doing? Because you never bet against the Fed, right? And the Fed's not going to raise interest rates. And when it comes down to it, all you're looking for is cash flow. So, I keep looking at, if I'm evaluating a real estate deal, I'm really looking at, first of all, do I understand the industry? Okay, because I have to understand the industry. Else, why am I investing in it? And second of all, is there good cash flow even when the occupancy goes down? Okay, so even if there's low occupancy, can I still get enough cash flow to pay all my expenses and my debt? If so, then I'm golden. And to me, that's the simple analysis of any deal. It doesn't matter, the cap rate doesn't even matter. Okay, so we talk about cap rates a lot in real estate, but the reality is what matters is there cash flow. Okay, and if there's cash flow, then we can weather the storm. Right? If it crashes next year or 2 years from now or 5 years from now, it doesn't really matter as long as we got good cash flow coming in on the project. So I would just follow where are the new opportunities? Probably wherever the new administration takes their policy is where there's going to be a lot of opportunity, especially with, government will get bigger under this new administration. Government got a lot smaller the last 4 years. It's going to blow back up like it did under Obama. Joe Biden loves big government. And so, I would look for real estate in government, government offices and government housing and, things where the government's going to expand. Look at where would the government expand? There's going to be real estate opportunities in those places.
Well, we're in the midst of the pandemic as well. And I'd be curious as to your thoughts as to things like office space and other maybe traditional real estate as it will possibly be affected by foreclosures and more. Do you want to say anything about that before we change gears?
Yeah, for sure. Commercial real estate is going to have a challenge. It's going to have challenges over the next few years. People have gotten used to being on Zoom calls. They're used to doing it remotely. A lot of people like being home, and if they don't want to be home all the time, but they wouldn't mind being home 2 or 3 days a week. Okay. Or they may not even want to work in the big city anymore. Right. So I don't think it's going to be as drastic as it's been. Right. I think that once the vaccines come out this month, and get into the general population, I think that people will start moving back into the cities, and the cities will come back to life. I just think that what you're going to see is you're going to see a lot of office sharing. So like for us, in our office, we're actually moving into a new office in the building that I own. And one of the offices will have 3 different people in that office because they don't come in at the same time. Mm-hmm. Okay. So they're just going to rotate, they come in, they'll have their own filing cabinet. Right? Each one will have their own filing cabinet, but for their personal stuff, but we have a single table that all of them will use and a single computer there that all of them can log onto. And I think you're going to see a lot of that. So I think that somebody who's typically might have 10,000 square feet might now have 5,000 square feet. I think they're still going to have the 5,000 square feet. It's just going to be, I think the smaller offices actually will do better because I think there's going to be a lot of downsizing in office space.
Awesome. Thank you, Tom. Well, I have kind of a lightning round I wanted to have with you here as we wrap up. And I thought maybe we do this sort of as a game a little bit where we sort of throw out, maybe I'll start with as many as I can think of. And then I'd love to have you just run that ball as far downfield as you can. How many different streams of tax-free income can we come up with together? And I'll say a few. You give me your 1-sentence reaction to them. Great idea, terrible idea, something to watch out for. You kind of get what I'm going for here. Where I just say, for example, Roth IRAs. Okay, so gut thoughts, reactions to a Roth IRA, pros, cons, indifferent.
Great idea. If you're investing in ordinary income type property like stocks, bonds, mutual funds. Okay, absolutely terrific for that. Terrible for real estate.
HSAs for retirement income and health
Well,
insurance.
HSAs generally are great because they're, it's a tax deduction that you wouldn't otherwise get. So why not, instead of not deducting your healthcare costs, deduct them. So HSAs are great.
Great. What about depreciation on real estate? Would you count that rental income that you can deduct?
That's probably the best right now. Rental real estate would be absolutely your best cash tax-free income, because not only you have the depreciation, but you can do a 1031 exchange and you can borrow money, and borrowing money is tax-free. And then when you die, all of the income tax goes away. So
buy, borrow, die.
Buy, borrow, die. There you go.
It's great.
So that would be the best.
Love it. Speaking of real estate, what about reverse mortgages? Thoughts on that?
That's the type of thing that depends on the person, right? I mean, it really does. A reverse mortgage can be great, and it can also, kill people. So you just got to be, that's one of those things where you need a good advisor like you to actually walk somebody through. Okay.
Sure.
Yeah, this makes
not a good deal for everybody.
Bad idea, but it could
be. Absolutely. Totally agree with you on that. What about life insurance as an income stream?
Life insurance, again, tax-free for life, tax-free on death. So I like tax-free now and tax-free later. So life insurance is great.
Awesome. Can you think of any more that I'm not thinking of? Mini bonds maybe, or
Sure. A business. Okay. Right now you can build a business, have it for 5+ years, sell the business tax-free. Okay. So you can actually cash out tax-free. Business is the only thing you can cash out of tax-free. Okay. So business is probably the best of all tax shelters is business. It's also your best return on investment is your own business. And you can combine it with real estate because you own the real estate that houses the business.
Wow.
So to me, business. Clean energy is a terrific, and it goes forever. See, the thing about clean energy is wind energy goes forever. You never run out of wind. Okay. Whereas like oil and gas, you deplete it, right? So oil and gas is good, but it runs out. Whereas real estate doesn't run out, but it wears out. Clean energy, renewable energy never wears out. So I think renewable energy is one of the best, both from a tax standpoint and from an income stream standpoint. So I'm a big fan that entrepreneurs are going to make a lot of money in renewable energy.
Well, that's a hopeful way to end the episode there, Tom. Thank you very much. I'd like to, give you the chance and our listeners the chance to learn where they can find you. You're all over the place, but where can they find you?
Well, certainly the Wealthability Show. So my podcast is, thank you for being a subscriber. And I love doing it. I get to meet all sorts of great people. My book, Tax-Free Wealth, it's been a perennial bestseller. It's always been number one as its category on Amazon, but we sell more now than we've ever sold before. I think that's thanks to Joe Biden. So I appreciate that, Joe Biden. Because you scared the daylights out of people into buying my book. It's great. So Tax-Free Wealth is a good place to go. And then of course, if you really want person-to-person hands-on stuff, or you want some really good financial education from a tax standpoint, just come to wealthability.com.
Very good. Thank you, Tom, for all you're doing and pushing back the frontiers of ignorance on taxes and making it fun and understandable for all of us.
Awesome. Thanks for having me, Mark.